All right, let's get right into it. Bitcoin was created to be the ultimate outsider, right? Something totally separate from the traditional financial system. But now it really looks like Wall Street has found a backdoor. We're going to pull back the curtain on the powerful and pretty much unseen forces that might just be pulling the strings on the price of the one asset that was never supposed to be controlled.
So our story starts with this really weird puzzle that had the entire crypto world scratching their heads for months. It was almost like clockwork. Every single trading day, right around 10 a.m. Eastern Time, the price of Bitcoin would just suddenly nosedive. This was way too consistent to be random. So the big question was, what on earth was going on? Well, the answer might just lead us to a company that most of us, including me, had never even heard of, Jane Street. You can think of them as a ghost in the financial machine. They're this super secretive but massively influential trading firm operating deep in the shadows of Wall Street. And as we're about to find out, they were right smack in the middle of this whole mystery.
To give you some idea of their sheer scale, Jane Street trades over $1 trillion in securities every single year. Get this, last year they actually made more money from trading than giants you have heard of, like Goldman Sachs, Citigroup, and Bank of America. They are an absolute colossus in the market.
In fact, some estimates say that Jane Street is the firm behind more than 10% of all stock trades in the entire United States. Just let that sink in for a second. 1 out of every 10 trades, this one company is involved. Their influence is, well, it's almost impossible to overstate.
And all that influence? It is unbelievably profitable. The average salary for one of Jane Street's employees, and there's only about 3,000 of them, is a mind-boggling $1.4 million a year. So yeah, this isn't just some successful company. We're talking about a true financial juggernaut.
So what is this company? Well, its whole structure seems designed for secrecy. It's a quantitative trading firm, not a hedge fund, which is a key distinction because it lets them sidestep a lot of the public disclosure rules that the big banks have to follow. They're so weird, they don't even have a CEO. But here's the absolute kicker. They are one of only 4 firms on the entire planet chosen to be an authorized participant for BlackRock's huge new Bitcoin ETF.
Okay, so what in the world is an authorized participant, or AP? Well, in short, they're the official middlemen of the ETF world. They have a special power to create new ETF shares out of thin air when people are buying, or get rid of them when people are selling. Their official job is to make sure the ETF's price stays locked to the real price of Bitcoin. But this job comes with some very, very serious perks. Let's call them superpowers. Superpower number 1, they basically get to bend the rules. See, normally, if you want to bet against a stock, to short it, you have to borrow the shares first. It's a rule that stops people from just selling stuff they don't have. But APs, they get special exemptions from parts of that rule. It gives them a kind of flexibility that no regular investor could ever dream of.
And here is their second and arguably much bigger superpower, hidden positions. When a firm like Jane Street files a report saying they own, let's say, $800 million of a Bitcoin ETF, that only shows their long position. That's their bet that the price is going to go up. Here's the crazy part. It doesn't show their bets that the price will go down. They have zero obligation to disclose their short positions, their options, or any of their other bearish bets.
Okay, if that sounds a little complicated, don't worry. Let's try a really simple analogy. Imagine the only way you could invest in a super rare Pikachu Pokemon card was through something called the Pikachu ETF. The actual physical card is locked away in a vault, and the APs are the only ones who can create or destroy the little tickets that represent ownership of that card.
And this is where the analogy just hits home perfectly. The AP can go out and publicly shout, "Hey everybody, look at us. We own 1 million Pikachu tickets. We love Pikachu cards." But what they never, ever have to tell you is that they also placed a massive secret bet that the value of that same Pikachu card is about to completely collapse. They can look like they're supporting an asset while secretly being positioned to make a fortune from its downfall.
So, how could this actually play out in the real world with Bitcoin? Well, the alleged playbook goes something like this. Step 1, you buy up a bunch of actual physical Bitcoin. Step 2, you secretly open up enormous short positions, betting the price is about to fall. Step 3, right at 10 a.m., when you know trading volume is kind of low, you dump a huge amount of that Bitcoin onto the market, creating a flash crash. Step 4, you cash in on your now hugely profitable short positions. Then, for the final move, you close those shorts and use all your profits to buy back even more Bitcoin at the new, artificially low price you just created. And then you just rinse and repeat.
Now look, that is a massive accusation, but what makes it a little more believable is that this is not the first time Jane Street has faced these kinds of claims. Not even close. Back in 2022, they were sued for allegedly using inside information to profit from the $40 billion collapse of Terra/Luna. And just last year, they were straight up banned from trading in India for stock market manipulation.
And you have to hear what India's market regulator actually said. They found Jane Street guilty of using, and I'm quoting here, a morning pump, afternoon dump strategy. They'd push prices up in the morning and then reverse their positions in the afternoon to profit from the fall. I mean, does that sound eerily familiar to the 10 a.m. Bitcoin drops or what?
Now, to be fair, you always got to hear both sides. There are counter-arguments. Some analysts say, hey, this is just normal repricing that happens when the US markets open up and new info hits. Others suggest it's a totally standard trading strategy called delta neutral, which is just a fancy way of saying you're trying to make money whether the price goes up or down, and it isn't necessarily malicious. And you know what? Both of those are totally reasonable arguments to consider.
But then came the bombshell. Remember that lawsuit I mentioned about the Terra/Luna collapse? Well, on February 23rd of this year, the details of that lawsuit, which named Jane Street, became public for the very first time.
And the 10 a.m. Bitcoin drop, it just stopped. Like the very next day, after months and months of happening like clockwork, the second a public spotlight was shown on the firm, the pattern vanished instantly. Could that be a coincidence? I mean, maybe, but that is a very, very big coincidence.
And the market's reaction was immediate and absolutely explosive. In just the 24 hours after that pattern stopped, over $213 million in short positions got liquidated. Poof, gone. BlackRock's ETF saw $250 million flow in a single day. And the total crypto market cap surged by $200 billion. It was like the entire market just breathed this massive collective sigh of relief. So here's the real point of all this. This story isn't actually about Jane Street. It's about the system that makes these kinds of alleged actions possible in the first place. Bitcoin finally got its big Wall Street ETF, but it came with a catch. It came with the middlemen, the authorized participants who have special privileges, hidden positions, and the potential power to move markets in ways that the rest of us can't even see, let alone compete with. And that all brings us back to the most important takeaway. Why does any of this matter to you? Because it cuts right to the heart of one of the most fundamental principles in the entire crypto world. And it's captured perfectly in that phrase. Not your keys, not your Bitcoin. See, if you own your Bitcoin through an ETF, you are putting your trust right back into the exact same system of powerful middlemen that Bitcoin was designed to get away from. But when you hold your own keys in your own wallet, no amount of market games can touch your actual coins. The price might get thrown around, but your Bitcoin remains yours. Which really leaves us with one final big question to think about. When you have a financial system that is built around these kinds of gatekeepers and special exemptions for a select few, is the potential for manipulation an unforeseen flaw, a bug in the system? Or is it an intended feature of how power and control really work? It's definitely something worth thinking about.